live. We are live with Nadia Colucci.
Hi.
What's up, Nads?
How are you?
How are you doing? So
good.
It's a good thing I didn't wear my yellow shirt today.
I know. I try to compliment the nice background yellow that we like.
We actually have it all nailed right here.
You got it good.
The whole
I like
thing
this.
down.
I'm happy our wardrobe specialist talked before we got here and coordinated.
Is that what she is?
Yeah.
So we're going to get to all these open house signs.
Okay.
We're probably going to rabbit trail a few times, I'm sure. But this is one of those things where I've been telling you, red flag, red flag, red flag.
We have.
And in this past weekend in Del Mar, I saw the most open house signs I've ever seen in Del Mar. I've been there for almost 3 years.
Okay.
And they were literally fighting for sidewalk space.
Right.
Like one on top of the other.
Right. No,
And then it
for
became
sure.
a quantity game. And I was like, I have 5, I have 6, I have 7. And so these open house signs were everywhere. Del Mar has had a lot of inventory for a while, though.
Right.
It hasn't been one of the super hot markets. There's certain price points in Del Mar that were hotter, but like even the condo that I live in is $1 million, a
Right.
2-bedroom condo. So it's a different market.
That's cheap for Del Mar.
Right? So I don't want to sit here and be like, oh, well, Del Mar is the leading indicator for the whole San Diego market.
Definitely not. It stretches from like 35 million to 2 million right now, I think, in pricing. So, but I get what you're saying. That happened in Carlsbad. I was there this weekend with an
Really?
open house, and we're fighting for space as well. But I did notice a lot of the same sign. So that's a strategy as well, is just
Okay.
blanketing a corner with like 6 of the same open house signs because it looks more attractive. So I don't know, one open house sign doesn't stick out as much as 5 of the same.
I will also say I saw an open house sign down there on Stratford near my place that has been there a few weeks in a row. Not too strange for, you know, a house in Del Mar, a high-end home in Del Mar to have multiple open houses, but I just, you know, seeing a lot of that stuff and seeing some price reductions happening and just kind of going, why so many open house signs? Why so many homes for sale? Why are homes not moving like we think and people are saying that they are?
Well, but if you do the numbers, Del Mar still has less than a month of inventory on the for the market, and so does Encinitas, Carlsbad, right around there as well.
A month?
Less.
Less than 1 month?
Less, from based on what has sold. So, you know, if you're trying to time it and look at it from if nothing new came on the market, how long would it take to sell currently what's existing? But you have to have some barrier around that. You can't take a $35 million one and, you know, a $1 million one. You can't, they're not really as comparable.
hard to do.
The 35 mil has been on the market for a couple hundred days. I mean, that makes sense though there. So I think if you look apple to apple or banana to banana.
Banana.
Banana. Then you'll look at it.
So let's just tell people, go ahead and YouTube this.
Not right now though.
Not right now.
Yeah.
Save this. YouTube English boy gets banana for Christmas, and just trust me on that.
And then you'll know what we're talking about.
Okay.
Yeah. So like, you know, apples to apples, I think you'll see that the inventory still has a quick turnover. 0 to 4 months is a seller's market. I think 5 to 7 starts to be like a healthy market, and then anything over that is more buyers.
No question we were a little jaded here. I mean, like, I hear people say, oh, I had this house, you know, and it took a month to sell it.
Right.
Or it was on the market 3 weeks.
Yeah.
And people are like, oh
Freaking
my
out,
gosh,
I know.
what the heck is going on?
If it's priced right.
So I get it. I'm not trying to be that guy.
Yeah.
Like, I'm not trying to cry wolf here.
Right.
But I'm just saying, what I visibly see.
Yeah.
So as you know, I've traded the markets for a long time, and I've made the most money of anything I've ever done in my life doing what I call the oil trade. Have I told you about this?
No.
So the oil trade is the simplest way to play on like macro swings in feeling, and in reality, what actually is happening to people's wallets.
Okay.
So this is how it works. Whenever you hear people talking about how low gas prices are, whether it's in the news or you hear people, it's a topic of conversation, gas prices are so low, then you buy oil. Now, I buy the USO, which is a conglomerate ETF of lots of different major oil companies.
All right.
It's a simple way to diversify that. When you hear people talking about how high gas prices are, then you sell it.
Makes sense.
Okay, I literally made a fortune doing this because it's a macro trend that affects oil affects everyone.
Right.
When you don't hear like much, like no one's talking about gas prices right now, nothing's going on. Well, I bought the USO high 7s, like $7.91 or something like that. I think it's at $10 right now. So it, you know, it's waiting. We're waiting for it to get back up there. But this is something that's traded $50, $60. So I like to look at things economically with my experience first, because the data will always tell you kind of whatever you want it to.
Sure, you can skew it. Yeah.
It can be skewed, but your actual experience can't really be skewed. So when I see things that I haven't seen in years, you know, I haven't seen this.
Right.
Maybe people are starting to get it. Wow, it's a good time to sell. There could be a perfectly logical explanation. But when I see that many open house signs, I start going, man, must be tough to have an open house these days.
Well, and remember that a lot of agents, the listing agent might hold their own open house the first time, but usually the second time, it's usually another agent. And a lot of agents, newer agents, do open houses for leads as well. So if there's a great property, but it's a higher price point, like a $35 million one probably doesn't even have open houses. But you know what I mean? Like other people use that for leverage to get leads. So people are capitalizing on that because it's hard right now. There's no inventory. So if something's on the market for longer than 7 days, that's 2 open houses that you can do. Someone else might offer to do. I get asked all the time, can I hold your house open just for leads? So there's that, as well as, we talked about this on another segment of ours, that sellers might be just a little greedy. And in fact, I had to run the numbers because you won't believe it, but in the last, so check this out, in the last 30 days, and I chose, I think, Carmel Valley, Del Mar, Encinitas, and Carlsbad, some great North County coastal places that everyone loves, right?
North County coastal places that North Compass Realty services on a regular
there you
basis.
Go. There were 271 new listings, about 350 sold, so that affects from before as well.
Okay.
238 had a price adjustment.
Price reduction.
Adjustment. Now, my guess is they didn't go up, they definitely came down. That's a huge percentage in 30 days.
It's almost all of them.
It's all 87%. It's ridiculous. So, but that is also taking into consideration any price adjustment that happens. But when you look at those numbers, you're thinking, what's that tell you? Well, to me, it's telling me that the number, they're listing it wrong, they're pricing it wrong.
The market's trying to find itself.
Yeah.
You see this.
Well, I think the market has found itself. The buyers and their income dictate what someone will pay for a property. And we have a lot of tech, we have a lot of, you know, sophisticated people here in San Diego, and they're going to pay for a little, and they might pay a little over. You know, we've talked about, you know, overpaying 10 or 15,000, even 20 over the course of a 30-year loan is not that much for the house that you want if you plan on being there 7 to 10 years. So I don't know, I don't mind it either to some degree, because the sky's not going to open and we're not going to get dropped 2,000 new homes here. We're still just dealing with what we have.
Yeah.
And people don't necessarily really want to leave. If they want to, though, they should now, because the sellers market's great.
Great time to sell.
It is.
But if you go take a trip, I took a road trip a couple weeks back up to San Francisco.
Oh, fun.
That'll straighten you up real quick.
Yeah, you're going to
Go to San
run back
Francisco,
here.
jump on Redfin, and just look around.
Right.
Look at what stuff is selling for and what's listed for around you. I actually went to an open house while we were there.
Oh, yeah?
$9 million.
Oh, that's it?
Yep.
What did it look like?
It was cool.
Yeah, I'm sure.
It was cool. It was like a corner lot, kind of a elevated. You could see some of the bay.
Nice. Okay, bay views. I mean, that's going to carry.
Views, 4-bedroom, 4.5 bathroom.
That's a nice size house. Then,
like
too.
4,000 square
For
feet.
San Francisco, it's rare to have such a big house too.
$9 million.
Yeah.
So that house in Chula Vista is $675. You know what I mean?
Affordable.
So
look at that.
I'm just saying, you know, it's a crazy thing.
Yeah.
So you got to keep that in mind. I think what you're saying there, that stat. Can you say that one more time, because that is like an eye-opening thing.
In the last 30 days, there were 238 price adjustments in Carmel Valley, Del Mar, Encinitas, and Carlsbad.
Out of 270?
271 are the new listings that hit. So
Okay.
they don't immediately have that, right? Because the stat pulls back. So anything active will then filter into the price adjustment.
Gotcha.
And so currently active in that whole area is maybe 570, I think is what I saw.
So it's got
but
almost
still,
50%
it's still
of the
50,
active
yeah,
homes
it's still 50% then.
have a price adjustment.
But I think that's actually normal. We made an offer on a property that was about 40 to 50 grand over value. And me and other agents all came in at the same price point, and we didn't get a response, we didn't get a counter. And I'm like, what? Why not? It's hard to explain to your buyer why a seller is not being reasonable. And the agent's like, I'm sorry, my hands are tied. They refuse to look at anything that's not at list price. And I said, all right, well, then we'll see you in 3 months. When I come back at a lower price now. And I've had difficult sellers before too that just don't want to listen to anything. You kind of have to, you can do your best and give them your advice, tell them what they need to do, and then say, if we don't do this now, then you'll end up making less later. So it's up to you. And it's their choice ultimately. It's their house and it's their money.
That's 100% true. 100% true. And that's kind of what I mean by, I think, the market finding itself. We see Ann Benitez has commented. Hey Ann, what's up?
Hi,
Yeah, if you
Ann.
comment, this is obviously a live broadcast, so if you want to do a comment, we can read your comments here. We can interact with you live right here on the show. So the what I mean by the market sort of finding itself is that, so like you have the bid, right? The buyers. The bid, you have the ask. And I always look back to stocks because, you know, trading stocks, let's see here. Does that make sense? All right, so there we go. So you have the bid, and the bid is going up and up. And then the sellers are kind of going, oh, yeah, up, 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 up. And then they start going up here, and the buyers are still down here. And so then they have to start coming back down and track down to where the bid is.
Oh, wait, went a little too fast.
Okay, we got a little bit of, so I think that's what you're seeing there. And that may be why we've seen a little bit of a slowdown, maybe, you know, in total transactional or things on the market for a little bit longer.
A little nicer adjustment to that. I mean, we still have, again, 0 to 4 months is still a seller's market. We're still quite far from that before we get to, I even like the healthier markets where it's buyer and seller both have a little bit of pull and negotiating power. Makes it a little, you know, I think that's a little bit more fair. But right now we're in a niche market. To jump to any other one, which would either be the average one or a buyer's market, it's a significant jump, which would mean something catastrophic would have to happen, right? Something we can't control, a loan crisis, you know, anything that, you know, like as we've talked about before.
Yeah.
Or our little buddy Kim Jong.
Kim Jong, yeah.
Jeez, it's not gonna be started.
I'm gonna get you started, but in a minute.
Okay.
In a minute.
All right.
So one of the things I noticed with these different signs, all these open house signs that were out there, were that a lot of different brokerages. You know, it's not just, you know, the big box names anymore. Things have changed, and you actually stepped out and did your own thing, North Campus Realty.
Yeah.
So what do you think is happening in that space for people? Does it affect, you know, people who are buying and selling homes at all, or is this something that's just an industry thing that's going on?
I don't think it matters anymore. I think it used to matter. I think people had a lot more loyalty and wanted a brand they recognized as a sign in front of their home for many, many years. I think our newer generation, since the boom of the internet, I don't think it matters, right? Because with a couple clicks on your phone, you can read someone's experience, see where primarily they work, read their resume, see their testimonials, and trust that person. Doesn't matter what brokerage they're behind, it's the person that you're really working with. So I think we've moved away from that perception that the bigger names mean everything. I will say bigger companies tend to have better training programs, so if you're a newer agent, that makes sense. But from the consumer standpoint, I don't see why it would matter at all. Because what they used to try to say was, oh, well, we'll all share it with all of our agents first, so we can double end a deal or sell it for you off market. We can all do that nowadays too with emails and social media and things like that. So I don't see where it matters anymore. I think there was room, or there was a need maybe for a blend of a boutique and a corporate. And that's why, you know, Ann and I went off and created it with our broker and feel that it kind of gives the corporate structure, the philosophy behind that, the rules and regs still of that, but then the charm, personality of a boutique with the service of a boutique with, you know, of course, a touch of pit bull when you need it. But which we
I was going to say, charm as in what exactly do you mean?
We can be charming, but we can also get
like
pretty aggressive.
Italian, right? I mean, it's like
don't make me prove it. But I think there was a need for that because corporate typically looks more at their customers maybe as a number, because they have shareholders to appease and numbers to meet quarter end. We don't look at that, right? I don't even, you know, I can calculate how many doors I've sold a year, but it's not important to me. The relationship is important. I think that blend of the two is what stands out today.
Okay, and that's what people are probably looking for more.
I think so. I think that's what they're looking. I don't think people care as much. We had an open house like 2 months ago, and this kid comes in at the end, and we're like, oh, okay, no worries, we'll reopen it all up. And he was really nice, chatted with him a bit, and then he leaves. We close everything down. As we're taking everything to our car, he's still there on his phone. And I thought he maybe had another question. He's like, no, I was just reading your testimonials on your website. Like, you guys really know what you're doing. I can tell by meeting you, blah, blah, blah. And just basically quantified us right there. He talked to his wife and he came back and he's like, if you guys don't mind, we'd love to work with you. I mean, that's a huge honor.
Wow.
But in 5 minutes, he was able to not just read what we put on our website, but what other people have shared about us as well. And that happens for all agents everywhere. So I think today, it doesn't matter what is on our sign, it's ourselves, right?
I 100% agree, and there's so many different places now to find, Zillow being one of them, so let's jump to that topic real quick. So we're having a huge debate right here.
I'm so excited.
On September 7th. I would love for you to be here. We're going to have a very small in-studio audience.
Okay.
That will be able to witness it and ask questions.
Oh, I love it. I'm so here.
Oh, yeah.
When is
Jerry,
it? The
Jerry
7th?
Springer. I mean,
Oh, yeah.
chairs are going to be flying
I can't
through.
wait.
This place is going to be torn
Well,
down.
I'm neutral on this. Like, I actually feel I want to be
Really?
convinced one way or another. Yeah, I can play devil's advocate for either side on why, I love
So
or
you're
hate.
really in the middle on the Zillow debate.
I kind of am. I might tend to lean a little one way, but I'm not going to tell you which one.
Okay.
Okay.
Fair enough. Which way?
What next?
Which
No.
way is it?
Zillow, what about Zillow that we're worried about? They're going to take over the market, or that they're going to start their own brokerage? What questions are out there that you're concerned with?
Well, I think there's twofold. One is the consumer-based situation, and people love Zillow.
Yeah.
It's a consumer safe haven, as Sean Cahan has mentioned multiple times on the show, and he's like one of the #1 lenders on Zillow.
Yeah.
So for him, it's a great place. Consumers can go there, they can find him, they can read his reviews, and he can help them with a mortgage loan. And a lot of agents feel the same way. Like, hey, it's a great place for me to post reviews, get business.
Right.
There's some issues with the data on Zillow. The business model, I think, has conflicts of interest built into it,
Do too.
which is my issue with it. I think that the data not being clean makes no sense.
Right.
It has to be done on purpose, and it is a problem. But you can't argue with that many fans, really. Like when people like it that much, they use it that much.
Well,
and it is cool because you can
is.
look stuff up. Like when I want to look at my childhood home I grew up in, I go to this. I have the Zillow app on my phone. I have both Zillow and Redfin. As many things as I may say that the people at Zillow don't like, and all the Redfin agents who don't like me anymore, even though I really do like Redfin. It's the only app I use to look at real estate, except for Zillow when I want to look up something like that.
Fair.
They each have their place.
They do. But Zillow came out and coined that Zestimate, and I thought that was golden.
You did.
I do. I do think from a consumer standpoint, because now all of a sudden everyone thinks they're a professional at stuff. Well, Zillow said it. It was like a tipping point. It was the first of its kind to come out and do that. Now, Realtor, Trulia, Redfin, they all put that on there as well. They must do it differently. The algorithm must be different because they're not always the same.
True, and I like Redfin actually on this front. If you're looking for the value of your home, you should always look on Redfin, not Zillow.
Or Realtor. Realtor pulls it more from MLS.
Redfin shows you all of them, though.
Yeah.
So it doesn't just show you Redfin's estimate. It shows you the Zestimate.
Oh, yeah. I see what you mean.
And it shows you, I believe, the Realtor one, too, and theirs.
The Realtor one.
So it shows you the
Good.
range.
So you have a range.
Yes.
That's better. I do like that.
I like that much,
so
much
they
better.
took that and upped it, I think, a little bit more.
Correct.
Do you know most of my clients, when they are like, oh, I saw this property, it comes from Realtor.com. It doesn't come from Zillow or Redfin. But yet I know that from listening to everybody else, it's the most popular, supposedly. But
That's interesting.
I think they do a great job. They're a wonderful resource for consumers to look at as one step. It's not the end-all be-all. And I have a problem with them misrepresenting data. And I don't think it's done on purpose. I just don't think they have any rules or regs to follow. We do.
Right, because they're not licensed.
They're not licensed. Our multiple listing service has cause, effect, consequence.
Correct.
And that keeps everybody on the up and up. We have to share a certain amount of data. Zillow just picks the fun stuff and shares that. Then you can see the rest. And so their platform is much more user-friendly, and I get that. So in a quick pinch, pull something up and it's there.
You know what, Nadia, I don't feel like I have to beat around the bush with you on this. So I'm just going to tell you exactly the game plan, the formula.
Okay.
If I was the CEO of Zillow, what I would do today.
Okay, tell.
Because you should always do what you're good at, right?
Right.
If you're good at something, that's what you should do. Not
Makes
only
sense.
will you like doing it because you're good at it,
Right.
but also you'll serve humanity better if you do the things that you're good at.
Okay.
Unless you're good at killing people or something like that.
Right.
Then you need to join the military, right? Okay, so you can still do it.
Still do it for good.
Still
yeah.
do it. So if it's the case that Zillow wanted to do what they're best at, they're the Yelp for real estate.
They really are. That's a great way to look at it.
That's what they should be.
Yeah.
They're the Yelp for real estate. This is where everyone gets the reviews. This is where you go to find an agent.
Yeah.
Okay. You want to read up on an agent. You want to look at their transactional history. They could have, and they, by the way, they should become a brokerage. Okay. They become a brokerage. Well, this is how they do it. They become a brokerage so they can get the data. So they have a direct access
Right.
to the data. So now when I look up Nadia Colucci on Zillow, if I Google you, I'm probably going to find North Compass Realty,
Right.
and your website and everything. But if I'm just going to Zillow, and I look up Nadia Colucci, it'll say, here's your reviews. It'll say, here's your stats, list to sale price ratios, you know, number of homes sold per year, per month, average time on market versus the market average in that area for each home. I mean, they could have so much data there that's all been behind closed doors forever and still is to this day.
Yeah.
They could have all that stuff on Front Street, and then because as a brokerage, they would have access to it. And then what they could do is, instead of having you pay a subscription to be a Zillow Premier agent or whatever with them, which is kind of a wonky way to do things, create conflicts, what they could do is they could say, listen, we're a brokerage, we get a lead, we refer it to you, you pay a referral fee.
Easy.
If it closes, when it closes,
Yep.
you pay a referral fee. All the agents would like it better that way.
We would.
It would make a lot more sense.
We would.
Okay? And then you wouldn't have them trying to like be this pseudo brokerage lead generation, but we're trying to do this too, and we're trying to do instant
And
offers.
pitting so many agents against each other too, I think, is what they're doing. So they're going to create
Correct.
a pull away from that.
100%.
And they'd be accurate with everything they do. I mean, again, it's great and easy right now. People love to use it. I love that idea. I think it's great if they did that. It makes a lot of sense.
They'd be the Yelp of real estate. They'd have all the data. They'd make more money on the referral fees than charging people these monthly fees that they have to keep up with, and they don't deliver 1 month and the agent quits. They have to get a
Right.
new agent. Now they're promoting all these different. No, just put them all there.
Yeah.
List them, list their reviews, list their stats, and then refer leads to them.
Right.
Get paid on the end. I mean, it's just, it would take a second. There would be a 6-month shift, right? You'd have to talk to shareholders about, like, listen, here's what's going to happen. But you would make more money in the long run.
You would.
You'd be more useful. You'd be doing what you're good at. And people would still be able to look up homes and see what's for sale and all the things that people go there for in the first place.
Right.
All that stuff would still be there.
For sure.
But you become the Yelp of real estate, and that would really work, because I'll tell you right now, what's really interesting about Yelp is that a lot of people on real estate, and really in everything, but a lot of people in real estate and mortgage are on Yelp and doing really well on Yelp, because this next generation of people who, like that guy who's looking stuff up,
Right.
they're going to Yelp because they don't know Zillow. Zillow needs to step in before it's too late and make sure that they're the dominant force
For that,
in that
next
situation.
generation. Yeah,
Correct.
no, I agree with that. As long as you're not saying they'll come out and do discount brokerage or anything like that,
No,
like
they're
our
not.
Redfins or
Nope.
long gone I Pay One. So they don't have to if they use this model. But
Correct.
that surprises me. Nobody uses that. People call all the time, well, I have a lead for you. If you sign up and subscribe, I'm like, why wouldn't I just pay you when it closes? A 25% referral fee, industry standard, done. Why don't you just take that? It's more, it's better, but
It'll
they
be
want,
more.
right. But they also know the quality of the lead isn't always that great either. And listen, if you run through it, I'm sure we'll find out on the 7th.
They may not have a brokerage too. That's the other thing. You have to have a brokerage, right? You can't just pay anyone. the
Well,
fees,
sure,
so
no,
that's
of course,
kind
no,
the
industry
issue.
agent to agent or anything
Yeah.
like that. So if some are broker to broker rather, but I don't see why they don't take that, but that's because they want you to sign up. But they also know the quality of leads you're getting. You have to hammer hard if you're a premier agent through a lot of leads that are not that great. And so it ends up taking a lot of time and a lot of investment when you can get out there and physically meet someone at an open house and hone in on them and create that service. So I think this is something they'll discuss.
Oh, yeah.
And I'm going to hear.
September 7th, it's going down in here at 10 a.m.
I love it. I'm bringing my boxing gloves.
Oh, dude, it's going to be awesome.
I like it.
But, you know, part of the reason why they're delivering all those crappy leads is because they feel this need to quantify, you know, the charge that they're making.
Right. It's a numbers game. It's not a service quality.
Quantity versus quality. They need
Always.
to turn into a quality business.
Right.
If they did that, all of a sudden now they're asking more questions. They're getting less leads because they're not just asking for your name and your phone number,
Right.
but they're asking you more detailed questions. They're getting more quality leads because that becomes now the focus instead
Right.
of quantity. Instead of shoveling all this crap at people who are paying you money, now you're working on quality because you're invested in it with them. That would be a much smarter way, and they would win over a lot more agents if they did that.
They
too.
would win over a ton more agents. The problem is corporate isn't geared to just quality. It's quantity. They have to, right, to appease all of their investors and their VCs and all of that. So I think that's that shift between corporate and boutique, and that blend of the two is what you're describing. I think it'd be way better. Maybe we need to let them know.
Can we talk about Kim Jong now?
Oh, go. What?
Well, I have you here.
Yes, proud. Yeah. What?
So, gosh, should we do this? Should we go this way? I mean, we don't have to. You were at an open house in Carlsbad this past weekend.
Yes.
You said that earlier. I didn't follow up on that.
That's okay.
How did that go?
Great.
did?
Everyone, they're like
Traffic?
Yes, great traffic.
It was in, what was the price point in Carlsbad there?
$749.
Sweet
Nice
spot.
3-bedroom, 2-bath, 1877 square feet with beautiful view.
What's
nice
it?
view. 92009.
Okay, Old Carlsbad.
Yeah.
Cool. I like the southern, you know, Carlsbad zip codes. I mean, not that there's anything wrong with the northern ones.
No, yeah.
But it's just that it can be really
newer.
far.
Yeah. Well, it's actually right next to Robertson's Ranch, so you're kind of right on the border of the south to the north right there, and off like Tamarack and El Camino Real.
Okay.
And it's super charming, beautiful, single level, which I think is huge. Beautiful, big, great room, remodeled kitchen, and then some touches you can still add to it. And we've had a ton of interest. It's been great. So 3 showings today so far. I'll check. Maybe there's more. We hope there's more. But great feedback from everybody. Priced right. And so, yes, what was the question about the open house?
Oh, I was just curious.
Oh, that's nice.
Because we saw the open house signs.
Oh, yeah,
That's
yeah.
kind of what this
And I
is
saw the
about.
signs too. And by the way, I also noticed, and what caught my eye was that there was 6 of the same open house signs on one corner, the same person. And I was like, oh, that's overkill. But it did catch my eye.
That's one of those people who hands you 3 business cards when you meet.
Right.
And you're like,
you toss the others.
you're like,
yeah. What do I do with these?
Why did you just do that?
Well, Vistaprint. It's cheap, so they probably
Why are
printed
you
out a
making
bunch.
me an asshole now that I have to throw away, like, kill trees for no
Right.
reason? I'm not sure who this is. ABRM, brother. You need to bring an underwriter to your show to speak about all the loans they have been pushing back lately due to the appraisal coming in lower. Red flag.
We've had some of those. I prefer a red, white, and blue
Red,
flag.
white, and blue
It's
flag.
not only red.
Yes. So,
But
yeah,
that is true. The
that's interesting.
appraisals, we've had some issues with some, but not by a lot at all. I think the last one, we were off $6,000. So we met 3 and 3. These buyers had looked for a year. They knew they wanted this house. The sellers are super cool. It's not their fault. We've had
appraisals are tough.
Appraisals are tough because it depends on this one person at this one time.
I wish I knew who ABRM is. Abraham? Abroom? Is it Abroom? Is maybe someone who works out a lot? Let me
has
see
no
it. Let me
Abroom.
see your 6-pack. So I don't know who that is. Maybe reverse mortgage. AB reverse mortgage. Reverse mortgage
maybe,
guy.
yeah. But either way, it's a
yeah,
valid
who are
point.
you?
Oh, Andrew.
Andrew.
What up, Andy?
Andrew who? I know some Andrews. I know lots of Andrews. But anyway, so the whole idea with, you know, appraisals is that they're so subjective. I mean, like, it's one of the things that's the most difficult thing. It's a ridiculous job. Actually, it shouldn't even need to be there. It's supposed to protect people.
Well, no, I do think it needs to be there.
But why? So, like, if you sell me your shirt for $75, I don't have to get it appraised, right?
No.
I can just buy it because I want to pay for it.
Right.
The reason why there's an appraisal is because the bank says
There's a bank.
we want an appraisal because we want to.
The bank's
give you
not
the
in
money.
San Diego. The bank could be in Missouri.
Correct.
So they don't know. So you have to
don't
rely
know.
on an independent.
They want to make sure the person's not being crazy.
Right.
Because they may not be able to capture their money back if it's a non-recourse state like California is, for
Yeah.
example. So what that means, non-recourse state, at an appraisal right now, Nadia, any advice?
That's right. She is.
Talk it up, talk it up.
Have those comps.
yeah.
Make sure that water heater is strapped and braced.
Make sure you did the appraisal already for the appraiser.
She did.
So
we did it last night.
it's tough because the bank's trying to protect themselves, really, not the
Right.
consumer. It's not really about protecting the consumer. It's about protecting the bank.
Right.
All the banks are going to use different appraisers now, and they have different appraisal management companies and all those things. It's just a really weird situation. Now, if you're paying cash, obviously you don't need to get an appraisal.
Right. You don't.
If you're putting your own money down, you don't need to get one.
Right.
But what is the actual value of a home? Well, when you're the bank, you're not just concerned about what the value is today.
Right.
You're concerned about what is the value 3 years from now, 5 years from now, a year from now, 2 years from now, whatever. You're concerned about where this thing could go and what you will do if it does that.
Right.
So they're not very good necessarily at determining the current value of the home. They're good at predicting the risk tolerance for the particular bank, especially now that the banks own their own appraisal management companies.
Right.
They're trying to protect, that risk delta
Yeah.
that the bank is okay with.
Yeah.
You know?
Yeah.
So
I gotcha.
it hurts the sellers, honestly, a little bit. But maybe it does help normalize the market.
I think
I don't
that's it.
know.
Do you think that you don't think that it should be there so the seller can get any number they want? The buyer should, if the buyer's willing to pay for it, they can pay for it, right? You're saying?
And that's actually true
It
as
is
long
true.
as the bank's
If it's-
not involved.
Well, if it's their money, they can do
Correct.
whatever they want with it. But if you have to borrow from someone else, so if you wanted to buy my shirt for $75, I wouldn't. First of all, it's worth way more than that. But anyways, side note. But
Mine's not.
Aw, Amazon.
No.
Okay.
I actually got this in Spain.
Oh, that's nice.
Madrid, yeah.
That's nice.
When I was there, yeah.
We talked about this last
yes,
time.
I love
I like
these
that.
shirts. They're
Yeah.
so awesome, so bright colors.
Yeah.
You can't get them anywhere in the States.
Oh, perfect.
They're called Venti. It's a weird name.
Cute.
I'm
It's like almost vintage, but not like Venti.
Venti,
Cute.
yeah. I was thinking it was more like Starbucks, like large.
Oh,
It's for
that's a
big
Venti.
people.
That would make sense.
That's what I thought.
Yeah. Good,
Thanks
good
for
idea.
helping me feel
Yeah.
good though. But no, they have no. It's not. It's like 20 euro.
It's cute.
25
Oh,
euro.
totally reasonable.
But yeah.
Yeah.
Good. So
Okay,
yours
so
is
you want
75.
this for
Yep.
75, and you give me the money. It's one thing, but if you have to borrow the money from someone else, they're going to be
I have
like,
to borrow
well,
the money from Jade. He's like, wait a minute.
well, what kind of shirt is this?
Let me get an appraiser up in here.
Yeah, or at least tell me a little bit more about it. Is this what shirts go for today? Well, it's 3/4 length, so that goes for this, a little bit more than a tank top because there's more material. Well, all right, but is that always the trend? Does it have any upgrades? Has it been refurbished? Is it original
Is there a
condition?
hole in it?
Is there a
so
hole?
He, in his particular, as the bank in
Yeah.
that situation, that's what I mean. He's not necessarily just concerned about what it's worth today. He's concerned about what is it going to be worth next year after you've lived in it a year, after you've worn it a year.
Right, and
or
they do
2
look at
years.
trends, right?
They have to consider
Appraisals
that.
have to consider, appraisers typically go back. And, but I found it a little different. Like I typically think if your current value, it's 6 months. In this market, 90 days, if there's enough inventory to look at that's sold, otherwise up to 6. But I've had appraisers go back a year. So to me, I think that doesn't have so much rhyme or reason. That depends on the specific appraiser. I've had to do a couple rebuttals, but not many. We had to have, one was $25,000 off. And I'm like, what? We called out a different appraiser, changed the loan, and it came in at value. And they just for security, they called out another appraiser, and it came in. So 2 came in at value, and 1 did not. So there's that outlier. You do have sometimes those people that's.
It's a weird thing. It's hard to do.
It's weird, I know. And if
It's
there
really
was
tough.
if everything had to fit into one box, if a pool carried 20 grand in value, this is the thing that skews, I think, appraisals. If a property's on a road, appraisal will probably discount it 5 or 10 grand, maybe 10 if it's loud enough. A buyer will discount it 50 grand.
Yeah.
And that's where there's that, so a seller's like, oh, well, I have an appraisal when I refied.
It's completely
And they said it's
subjective, though.
way more. And I'm like, yeah, well, buyers won't pay that.
Correct.
Yeah.
That's
And
what's tough about
I
it.
think that's tough. And I also think appraisals are subjective when they do refis. They're a lot higher. I've had a lot of clients that are like, oh, I just refied, and they said it was worth this. And I'm like, it's not, but it's not.
Yikes.
So in that case, when the bank is loaning you more of their money at a nice interest rate, they might be more flexible to give you a little bit more. I've noticed that. I don't know if you've ever noticed
See, that to me doesn't make any sense because from the bank's perspective, whether it's refinance or purchase,
It's the same.
doesn't matter. Except a refinance with cash out does
Oh, yeah, sure, with
have
cash out.
recourse.
Uh-huh.
That's the difference. So if
Yeah,
I'm
with cash out.
buying, I have no recourse, meaning
Right.
like if I walk away from the loan, the bank can't sue me.
Right.
But if I refinance and I take cash out and then I try to walk away
Yeah.
and let it foreclose, the bank can come and sue me for their losses.
And that might be why they're a
That's
little bit
probably why they're
more
more lenient.
flexible to give a little bit more.
we just figured it all out, Abram.
Drop the mic, peeps. DTM. All right, we have more.
Drop the mic.
Abroom, just a fan. Well, we're a fan. Thank you.
Kayla, she's with the appraiser right now in Oceanside property. Love that she's a female, rare in this field, girl
It
power.
is. Aw. It is pretty rare. But
is
one
rare.
thing I'll say that we do is we do the appraisal up front when you list the home. Because you're going to have to combat it with other agents that know the market and justify it to an appraiser as well. So I do feel like if you do your due diligence up front, this was on the market 3 days and we had multiple offers on it. And, we had to be ready to go and justify it. So whatever I just did last week, we can now bring with us today, review it, and, it does make it easier on the
That's
appraiser.
the North Compass Realty difference right there. And by the way, we've showed your website
Yeah.
on this on the show before, but I know that you've been working on it and stuff like that, so
Yeah.
people should Google it, check it out. Nadia Colucci, Rockstar Realtor in North County here in San Diego. If you have more comments, please comment along and share this video if you think people would find it helpful and useful, as I'm sure that you do. Nadia, thank you so much for your time
Thanks
today.
for having
Great
me.
to see you.
Me
You're amazing.
too.
And there's more. We're coming back in just a few minutes. If you want to be smarter than everyone else, you'll stick around.